If you've been following the European markets, you know that the European markets have outperformed the US one year to date. Same with the Chinese one actually. If we look at the year to date performance, China, Germany and France, huge outperformance, huge outperformance. Of course, in Europe, who has outperformed the most? Those are mainly the defense companies, so the Rheinmetall, the BAE Systems, Rolls-Royce, etc., etc. By the way, if you want a specific video on those types of companies, do let me know down in the comment section below. Now, if you look at the US market, Dow Jones, S&P, Nasdaq, all down year to date. Of course, this is year to date. If we look at year over year in the last 5-year performance, the US markets are beating the European ones quite comfortably. Now, while I do not own any European stock in my portfolio at the moment, I do own one Chinese one. I used to own two, Pinduoduo and Alibaba. At the moment, only Alibaba. Now, if you follow the channel, you know that at the end of 2024, we did talk a little bit more about European stocks and Chinese ones as well, and saying that 2025 is probably going to be the year of the contrarian trade, which at the moment is exactly what is happening. So yes, in Europe, you have great companies like ASML, LVMH, all the defense companies, L'Oreal, Ferrari, and the company I want to touch on in this video is Novo Nordisk. Now, Novo Nordisk, as you know, late last year got hit quite a lot because, well, the results that came out did not meet Wall Street's expectations and maybe did not meet the higher end of the company's guidance. But I still think that this is an amazing company, and maybe at around $80 or so, it makes sense to revisit that company yet again. Now, I know we've also been talking about a more speculative name, such as Viking Therapeutics. Again, I say speculative names because at the moment there is just no revenue. Now, Vikings is or was maybe more of an acquisition play, right? You thought, okay, these are the results, maybe someone's going to acquire them. There were always those rumors, Pfizer or another company may be interested in acquiring that company for a premium. At the moment, it could still be a scenario, could still be that someone comes in and buys Vikings. Now, more recently, Vikings announced that they've signed a broad manufacturing agreement with Cordon Pharma to support commercialization of the VK2735, which, of course, is their oral solution to a GLP-1 solution. They have an oral solution and they have one where you basically have to inject it in your skin, just like the other solutions out there. So some are saying that, okay, if this is what's going to happen, then maybe they're not looking to get acquired. I still think the acquisition is a possible scenario. But if you do not want to have a speculative name, then I think Novo Nordisk could be the name for you. So let's discuss that in this video. If you enjoy this type of videos, leave it a thumbs up, subscribe. If not, we really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So right now, if we look at Novo Nordisk, it trades at $80 or $83 pre-market. It has a market cap of $354.2 billion. Year on year, the stock is down 37%. Year to date, the stock is also down 4% or so. In the last 3 years, stock is up close to 50%. And in the last 5 years, the stock is up 218%. If we look at the expected growth rates for revenue the next 2 years, that's at 19.5%, and EPS sits at 23.2%. So definitely a fast-growing company, top and bottom lines. Now, what about valuation? Well, valuation-wise, if you look at forward PE, sits at around 20 right now, and if you look at the average in the last 4 years, that's at around 30. So yes, today much cheaper than before. If you look at price to free cash flow, price to sales, EV to EBITDA, same story here, lower than the 4-year mean. Now, what about future growth? So we've seen the expected growth for revenue, for EPS, but what about free cash flow? Well, first up, in fiscal 2024, you can see that free cash flow did drop. I'll explain more in a second. But then in the upcoming fiscal years, free cash flow is expected to grow above 20% in each of those fiscal years. So basically going from $10.2 billion in free cash flow in fiscal 24 to just over $20 billion, so a doubling in just 3 fiscal years. Looking at where the company generates the majority of their revenue, comes at no surprise, that's in the United States. That one has been growing extremely quickly in the last couple of years. Then we've got Europe, Middle East and Africa, rest of the world, and China. Now with China, just like with India, these are markets that they are going to grow more rapidly in the future, especially India. Novo Nordisk and Eli Lilly are starting to launch those solutions in that country. And although they offer other products, the huge growth definitely came from Ozempic and Wegovy in the last couple of years. I mean, if we look at Ozempic, for example, that has grown at a compound annual growth rate of 98.1% since 2018. Then if you look at Wegovy, that has grown at a compound annual growth rate of 236.2% since 2021. Now, of course, you might say, okay, that's great, that's growth from the past, might not happen in the future. And I agree, I don't think we're going to see this type of growth in the future, but sustained high growth, I think, is possible. Not hyper growth, high growth, I think, is definitely possible. Now, zooming out a little bit, seeing what has happened with the business. Well, gross profit margin stayed around the same level or so in the last couple of years, 84-85% or so. Revenue has increased quite nicely. Now, as we've seen, fiscal 24, free cash flow took a hit. We see that was here as well. Free cash flow margin did come down 25.4%. Why is that? Well, if you look at CapEx in the last 2 years, that has increased quite a lot. So they're expanding their production capabilities. They're hiring more people as well. And so you're getting this type of hit. You can see this quite clearly here. Total number of employees has grown by 78.7% since 2019. Now, what has grown as well is revenue per employee. So quite efficient. And since this company is expected to go back to the previous free cash flow margin, it comes at no surprise that, well, these are the expectations for free cash flow growth in the next coming fiscal years. Now, what has happened more recently with Novo Nordisk? Well, on March 10th, they said the following. Novo Nordisk announced headline results from REDEFINE 2, a phase 3 trial in the global REDEFINE program. REDEFINE 2 is a 68-week efficacy and safety trial investigating once weekly CagriSema, which is not an oral dose, it's the traditional one, a fixed dose combination of, well, these names here is always something, and they compared it, of course, to a placebo. The trial included 1,206 randomized people with obesity or overweight and type 2 diabetes and a mean baseline body weight of 102 kilograms. Basically, what they found is that people that take CagriSema lost significantly more weight than those taking a placebo. Of course, as you know, with the stock's reaction, the number did not meet Wall Street's expectations, but it did meet the company's expectations. Well, the company was still quite happy with the results. If everyone followed the treatment perfectly, those on CagriSema lost an average of 15.7% of their body weight after 68 weeks, compared to only 3.1% for the placebo group. Even considering some people might not follow the treatment perfectly, the average weight loss was still 13.7% in the CagriSema group compared to 3.4% in the placebo group. And nearly 90% of people on CagriSema lost at least 5% of their body weight, which is considered a clinically meaningful amount. They also said that they plan to submit the drug for approval to regulatory agencies in early 2026, and more details of these results will be presented in the upcoming conferences. Now, of course, every time we get these types of things, the numbers come out maybe lower than expected from a Wall Street's perspective, but still good from management's perspective, the stock will get hit. That's what we've seen late last year. But at the end of the day, what's the most important? Well, the most important is one. Are you still losing weight? Yes. Does it tackle type 2 diabetes issues? Yes. Is it going to be affordable? To be seen. Can you take it without getting sick every single time? That's also something you have to consider. So these little misses here, 0.2%, 0.3% here and there, I don't think is the end of the world. I think the most important part is all the rest. So there is that, and that probably will provide more opportunities going forward. Same thing with Vikings. I believe they're going to show us the phase 2 trial results in the second half of 2025 for the oral drug. And then I think we're also going to get the phase 3 trials for the injecting one. Now, switching back to some finance stuff. Novo Nordisk, we do a quick reverse DCF just to see if it's expensive or not. So we plug in the free cash flow for the trailing 12 months, terminal growth rate, discount rate. The explanation is here on the screen why I use that. Dilution of 2%. You could put 3, I put 2. Right now, it tells me that the implied growth rate to justify today's price is around 7.2, 7.4%, depending on the pre-market action. Now, we've seen that free cash flow in the next, 2.5 fiscal years, we've seen that it's expected to grow, above 20%. And actually, if you look here at year 10 with this implied growth rate is reaching the number that we are reaching already in fiscal 2027. Now, even if we are conservative and we basically put here, let's put 12%. If we put here 12%, this means that the price right now should be around 47% higher than where we're at today. So yes, there is definitely a margin of safety here. Of course, you can play around with those numbers. We can even change it up to 3% dilution. And then here, if the implied growth rate is 12%, then the stock should be 33.4% higher than the price we're at today, with all the rest staying the same. Right now, if we look at the stock, a couple of weeks ago, also around $80 or so, the stock was oversold on the weekly. Right now, we're going to make our way above the 20-day moving average. It does seem like $77, $80 or so is a nice support area. We've been there a couple of times, and it does seem that we find quite a lot of buyers at these levels. Now, of course, a couple of dollars here, a couple of dollars there doesn't really make that much of a difference, let's be honest, for the future. And I think that despite having all the huge growth behind us, I think there still is considerable growth ahead of us, and especially profitable one, right? We've seen the investment phase, and now it's back to, well, growing and in a more profitable way. Now you're going to ask me, okay, great company, so why don't you own it? Same answer as with many of the other videos. These are informative videos. I present you good companies. Maybe this fit your portfolio. Maybe you have more cash on the side and you want to open a new position. So I present this. I don't have infinite amount of money, although some people think I do, but I don't. It's a very interesting company. It's definitely on my watch list, but at the moment, I do not have cash. I have other priorities. So there it is, Novo Nordisk. What do you think? Buy, sell, hold? Let me know down in the comment section below. Like, subscribe, all of that, and I'll see you all in the next one. Bye-bye.